There are many indicators that help forecasters chart the direction of the world economy, but Chris Martenson of peakprosperity.com believes that in the end, the future doesn't quite look as bright as it did before the crash. With high energy costs and weak growth, Martenson believes the system is highly vulnerable and the risks are actually larger than before the crisis for potentially bad things to happen. Aaron spoke to Martenson about what he recommends that people do. She first asked him what his best ideas are now in terms of asset allocation and other types of things of that nature. Take a look.
When we look at one of the things we like to do at Peak Prosperity is figure out how to get people to change their definition of investing. Now, we've been marketed to for a long time that investing simply means you take your money and you send it to Wall Street. It goes into a 401k and somebody manages it, and that's what happens. Very passive. Instead, we think the time has come to pull that money back, take it out of that anonymity of Wall Street, and put it into more face-to-face, direct things that you can understand. There are double and triple-digit investments people can make in their own home if they happen to own one, relating to energy efficiency, also energy production, and things like that where there are defined returns that people can get. I consider those extraordinarily good investments. We also advise that anybody who's got some sort of a high interest yielding debt on their books, that they should get rid of that. If you have credit card debt, if you have student loans, if you have car loans, even a mortgage at these generationally low rates, if you're getting 3.5% you're paying on your mortgage, if you can't earn that in the marketplace in a safe way, you might as well pay that off. So getting out of debt, we feel, is really, really important, because one of the themes here is that when you have rising resource costs, food and fuel, shelter, would be that rent or your overall mortgage payment, as those start to rise up but your income stays flat, you're just getting squeezed, and debt is a stone cold killer when you've got that kind of a situation rising up. It's basically stagflation for everybody but the 0.1% at this stage. What we don't like when we're looking across this landscape is we see everything that we would characterize as a risk or a pressure on the international financial system is now larger than it was in 2008. And those pressures are things like derivatives are 100 trillion higher, the too big to fail banks are even larger, sovereign debts are higher, not lower. We have all-time highs now in consumer debt back on the books. And what we don't have to support all of those things is that resumption of world growth, which our hypothesis is we are not going to see that with oil over $100 a barrel, which we think is a permanent condition. So that's the pressures we see building up. Resources aren't there in the cheap ways and amounts we need to have the growth that can sustain all of this additional debt and leverage that we're piling back into the system. And that's a scenario. I can't control that. You can't. Nobody listening to this can. But what you can control is how exposed you are in case that scenario doesn't work out. And that's where getting out of debt helps. That's where investing in your homestead, growing some of your own food if possible, those sorts of things. If you can do those are really good at adding resilience into your personal landscape.
I got to ask you, Chris, these are some pretty gloomy expectations. Not a lot of room for optimism there. So, point blank, when is this all going to happen? When is it going to come crashing down?
I wish I knew that. The whole economy is a complex system, and the one thing scientists know about complex systems, one of the big things is you can't predict when they're going to let go or how big the event is going to be. It's like earthquakes. You know, we've been studying earthquakes forever, but it still defies us when any fault is going to let go or how big the earthquake's going to be. But we can tell you that if it hasn't let go in a defined period when it should have released, the chance of a bigger earthquake coming sooner is higher than lower. And so that's what we're looking at when we look into this world landscape. We think that the chance of a financial earthquake is now higher, not lower, for the reasons I just described. And now that is the gloomy part. If you are dependent on that system maintaining itself perfectly as is, we believe that there's actually an extraordinary amount of opportunity wrapped into this story as well. But the first thing you have to understand is the direction the story is really going.
What are the biggest geopolitical and economic risks that investors will face over the next 6 to 12 months, short term?
Well, it's, Aaron, that we're going to have some sort of an accident. You know, you've got Japan pushing their accelerator to the floor, just hoping beyond hope that they can wreck the yen or at least debase it up further. They might succeed beyond their wildest dreams. We still don't know how this whole thing is going to play out in Europe around the Ukraine situation vis-a-vis Russia, aligning with China. China's now off in the South China Sea, you know, putting a drill rig in a place that Vietnam is not happy with. So there are a lot of geopolitical tensions. Any one of those could become the spark, or in this case, let me say the pin, because we believe that we're in a large central bank inspired bubble, set of bubbles. We've got bubbles in real estate again, particularly in the high-end market. We've got bubbles in equities. Everybody seems to be talking about that now. And we have bubbles, most importantly, in our bond markets. When you look at whether it's sovereign debt trading at all-time low yields, even for Spain. Are you kidding me? And we have junk debt trading with a 5% range in a 5-handle. So when we look at all of those things, we think that those bubbles, like any bubbles, they're just in search of a pin. Will it be the Japanese yen letting go? Will it be the geopolitical situation in Ukraine, or something entirely different? We don't know. We just think it's a risk, and so people need to be aware of those risks and position themselves accordingly. And for us, that means taking some of the money away from, or taking some of your capital or investment, stored wealth, out of that system and trying to get it into some other part of the system.
Now, do you think politics and monetary policy, as conducted right now, are being driven in any substantial way by peak resource dynamics?
Not in the Western world that I've detected at this point. China absolutely has gotten onto the story. A number of other countries are behaving as if they understood peak resources, right? So you got China out there with their magic checkbook buying everything they can, seemingly fairly price insensitive. They're outbidding everybody for land in Africa, copper resources, you name it. Now, China, I think, obviously understands it much better than my own country. I think my country is expecting that the markets will always sort of be there to provide whatever we need when we need it. We just have to pay for it. That's possibly true, but when we just look at the geopolitical situation right now around one resource, energy, the big piece of news that most people missed was a year ago, Russia and China signed a very major deal, which was going to be putting basically 20% to start, 20% of all the current Russian gas exports were going to be redirected towards China. Now, Russia doesn't have the capability to just turn a knob and get 20% more gas out of their field. So the question that got thrown onto the table last year was, where does that 20% come from? More accurately, who doesn't get that 20%? And that 20% could go up to 33% in the next few years after they start shipping to China. So this is a really, really big story. This is why we're seeing a little bit of a disconnect between Germany and the German people, and particularly the German industrialists and corporations. They're starting to really disconnect from the larger political story that Angela Merkel and Obama seem to want to carry, which is that they want to teach Putin a lesson of some sort. It's a very dangerous game that's being played, and here's the punchline to this story. The United States can only defend what we consider to be our interests in that region of the world by getting there by boat. China and Russia can both walk to the places involved.
That was Chris Martenson, founder of PeakProsperity.com. And now, time for today's big deal.